Welcome back to the deep dive. Today, we are really focusing our energy, maybe appropriately, on a market sector that's just seen explosive growth
Hmm.
and, frankly, incredible volatility over the last year or so.
Yeah, it's been pretty wild.
It's all being driven, it seems, by one massive force, the uh, the huge power demand coming from the AI boom.
Absolutely. We're diving into nuclear energy stocks today.
Exactly. An industry that kind of went from this quiet, almost background industrial player to suddenly being this high-stakes tech speculation story,
Oh,
almost overnight.
it did. That need for reliable, 247 carbon-free power for these enormous data centers, it's really put nuclear back on the map. Made it the market's new obsession, maybe.
Yeah, obsession is a good word. And just to give you a sense of how dramatic the moves have been, recent reports show one specific stock, Oklo, was up over 450% just in 2025.
450%.
In 1 year.
Yep.
That's not normal industrial company movement. That's pure momentum.
No, that's something else entirely. And this being everything you need to know about finance, our goal today is to really break down three key players here,
Right.
because they represent very different ways to think about this market. We've got Centrus Energy, that's LEU, Oklo Inc., ticker OKLO, and Nano Nuclear Energy, NN.
Okay, so three different angles on this nuclear surge.
Yeah.
We're going to dissect their latest financials, look at their business models, which are totally distinct,
Completely different.
and try to connect those models back to the fundamental risks. What you really need to understand.
And of course, we have to say this clearly. This is purely a deep dive into the info out there in public reports, financial statements. It's absolutely not financial advice.
No, just synthesizing the knowledge for you, our listeners, trying to sort through some of the noise.
There's a lot of noise right now.
There really is. And hey, if you find this kind of deep dive interesting, please do like and subscribe. It genuinely helps us keep bringing these analyses to you.
Yeah, we appreciate the support.
Okay, so let's unpack this. We've got Centrus, Oklo, and Nano Nuclear. You said they're different, and I think it's fair to say they almost exist in two separate financial universes.
That's exactly the starting point. You have to see that distinction. If you lump them all together, you completely misunderstand the risk involved.
So who's in Universe 1?
Universe 1 is Centrus Energy, LEU. That's your established player. Founded back in, 1998?
Yeah, late 90s?
Right. Their whole focus is the nuclear fuel supply chain, specifically uranium enrichment and related services. They are the sort of industrial backbone here, a mature company actually generating revenue.
Right. And their ticker, LEU, kind of gives it away. Low-enriched uranium. They're selling the fuel for the reactors.
Exactly. They're the gas station, not the concept car designers.
Okay, good analogy. So who are the concept car designers then?
That brings us to Universe 2. The speculative plays, that's Oklo, founded 2013, and Nano Nuclear Energy, even newer, founded 2022.
Very recent.
Very. These are advanced tech startups. They're not selling fuel. Their value is all tied up in future promises,
Like what?
like successfully developing and critically deploying these new small modular reactors, SMRs, or even smaller micro modular reactors, MMRs.
Okay.
So their stock price, it moves based on hitting licensing milestones, announcing potential future contracts, that kind of thing. Not on current earnings because, well, there aren't any significant ones.
Gotcha. So if Centrus is like the predictable player with actual financials,
Yeah,
these other two, Oklo and Nano Nuclear, they're trying to build something completely new.
pretty much, yeah. Define financial gravity, maybe.
Okay, let's start where things are maybe a bit more grounded then. Centrus Energy, LEU. What does their financial picture look like right now in 2025?
Okay, Centrus, LEU. This is the more concrete play. If you look at their second fiscal quarter of 2025, they reported positive net income, $28.9 million.
Okay, profitable. That's good.
Yeah, profitable. Revenue was solid too, $154.5 million for the quarter. And maybe most importantly, their cash flow from operations was positive, came in at $52.8 million.
Right, that cash from operations is key. Shows the core business is actually generating cash, not just, raising it.
Exactly. It's not just venture capital fueling it, it's the business itself. And they've got a pretty hefty market cap too, roughly, $6.97 billion USD?
So a serious company.
A serious industrial entity, yes. But, and this is important, even here, the volatility is kind of nuts.
How so?
Well, it tells you something about the whole sector, I think. Centrus's 52-week price range was huge, from a low of about $49 up to a high of $464.
Wow, nearly a tenfold difference, even for the established player.
Even for them, it shows how sensitive even the fuel side is to, uranium market jitters, geopolitical stuff, supply dynamics, investor reactions to expansion plans.
So their catalysts are things like successfully expanding their enrichment capacity, making more fuel.
Precisely. Executing on those big projects, meeting the growing demand. Their risk is more traditional industrial risk, project execution, commodity price swings. It's not quite the binary life or death risk we see elsewhere.
Okay, that makes sense. But
Okay.
now we get to where it gets really interesting, maybe a bit wild. Let's shift to Oklo and nanonuclear, the speculative landscape, where the valuation sometimes feels untethered.
Untethered is a good word. Let's start with Oklo, OKLO. Probably the highest profile name right now, wouldn't you say?
Definitely getting the headlines. So what's their model?
They design these compact, fast reactors. Their main line is called Aurora. Aims for about 15 to 50 megawatts electric output.
Okay, 15 to 50 milligrams. That size range feels targeted, right?
Very much so. That's kind of the sweet spot for things like dedicated power for a big industrial site or maybe a remote community
Or a massive data center.
Bingo. Exactly the kind of reliable, dedicated power a hyperscale data center needs. Which brings us to the elephant in the room.
The Sam Altman connection.
Right. Sam Altman, co-founder of OpenAI, he was Oklo's chairman, but he stepped down in April 2025.
Why?
Explicitly stated it was to avoid potential conflicts of interest. Because OpenAI was apparently starting talks with Oklo about a possible energy supply deal.
So the AI guy potentially buying power from the nuclear company he chaired. Yeah, I can see the concept.
Right, and that connection, that potential deal,
Yeah.
it just poured fuel on the fire for the stock.
You're not kidding. Oklo's market cap right now is staggering. It's around $20 billion USD.
$20 billion. Now, here's where you need to really pay attention. Contrast that huge valuation with their Q2 2025 financials.
Yeah.
Oklo is essentially pre-revenue. They reported a net loss of about $24.7 million for the quarter.
Wow. So valued at $20 billion, but losing almost $25 million a quarter and not selling anything yet.
Yeah.
How does that even work?
That's the disconnect. The valuation is almost entirely detached from current assets or revenues. Their price-to-book ratio is like 26.4. That's sky high.
So what are investors buying? Hope.
They're buying the story. The narrative. They're pricing in the possibility of landing massive power deals, especially with AI companies like Altman's. And maybe even more importantly, they're betting on Oklo successfully navigating the massive regulatory hurdles. It's pure future potential being priced in today.
That 450% run-up. It wasn't about earnings reports then. It was about hype, momentum, the AI narrative.
Absolutely. It's a moonshot valuation driven by this perceived urgent need for AI power.
Which also explains the crazy swings, like dropping 16% in a week when sentiment shifts slightly.
Exactly. It's incredibly sensitive to news, to milestones, to sentiment, purely milestone driven.
Okay, let's pivot to the other speculative player, nanonuclear energy, NNE, also in this reactor design space, but focusing on micro-modular reactors, right? The Kronos MNR. Is the situation similar to Oklo's?
Similar in that they're also pre-revenue at scale, yes,
Good.
but their focus is maybe even more niche. These MMRs are designed for even smaller applications, think specific data centers, microgrids, maybe industrial process heat.
And are they making progress?
Seems like it. They recently had a ceremony marking the start of some drilling work for their Kronos system design. It's a partnership with the University of Illinois. So tangible steps.
Right, moving towards commercialization, they're targeting filing for a construction permit with the NRC when late 2025, early 2026.
That's the timeline they've stated, yeah. So moving along that path, now their financials. Q3 2025, they reported a net loss too, about $7.6 million.
Okay, so also burning cash.
Definitely burning cash. They
Yeah.
used about $14.7 million in operating cash that quarter, which, isn't surprising for a company deep in R&D and starting demonstration work.
But do they have the money to keep burning it? That's the key question for these kinds of companies.
It is. And here, NNE seems pretty well positioned, actually. They recently completed a big financing round, $400 million, and it was oversubscribed.
Wow, $400 million.
Yeah, so they reported having a substantial cash and short-term investments balance, around $211 million.
Okay, so even burning $15 million a quarter, that gives them a decent runway, doesn't it?
It does. It suggests they have the reserves to potentially withstand a few years of R&D. And importantly, those potential regulatory delays, which are almost inevitable. That's a key differentiator, having that cash cushion.
Right. So let's try and connect the dots here. We've got
Yeah.
Centrus, the established fuel provider, making money, and then Oklo and Nanonuclear, both highly valued reactor designers, but pre-revenue burning cash. How do we summarize the fundamental risk difference?
Well, the contrast is starkest when you just look at the basic viability today. Centrus LEU is profitable, positive cash flow, positive net income. It comes from actually doing business right now, fulfilling contracts.
Paying the bills with current operations.
Exactly. Then you look at Oklo's $20 billion valuation, or even NNE's valuation, and you compare it to their current financials. It's a perfect example of investor hope completely overshadowing financial reality.
Right. The value is entirely based on them surviving long enough to actually build and sell these things.
Precisely. And that survival, that execution, hinges on two massive shared risks that Centrus just doesn't face to the same degree.
Okay, what are they?
First, regulatory risk. You absolutely have to get approval from the Nuclear Regulatory Commission, the NRC.
And getting a novel reactor design approved by the NRC.
Yeah,
That's not like getting a permit for a new office building, is it?
not even close. Think about it. The NRC has decades of experience with large, light water reactors. These new designs, fast reactors, microreactors, using different fuels or cooling methods, it's new territory for them.
So it's slow, complex.
Incredibly slow, incredibly complex, and the outcome is fundamentally uncertain. There's no guarantee of approval or on what timeline. So for Oklo and NNE, their stock price basically lives or dies based on hitting those regulatory milestones. It's binary.
Okay, regulatory risk is number one. What's number two?
Execution risk, just actually
Yeah.
building these things at scale, especially the first-of-a-kind units.
Right. It's one thing to have a design, another to actually construct a working, reliable, economic microreactor.
Exactly. You've got huge risks around construction itself, managing complex supply chains for novel components, and then just the basic question, will the finished reactor actually perform the way the computer models said it would? It's hugely capital-intensive, time-intensive, and technically challenging.
So Centrus manages an existing business. NNE and Oklo are trying to invent a whole new one.
That sums it up pretty well. LEU's near-term risk is much lower because they're operating, they have earnings. The others are betting the farm on the future.
Okay, so quick recap on the thesis then.
Yeah.
Centrus is the fundamental play here. Tied to current earnings, the existing fuel supply chain needs. Lower immediate risk, maybe.
Lower execution and regulatory risk, yes. Still exposed to market volatility, but a different kind.
While Nanonuclear and Oklo are the pure, high-risk, high-reward speculative plays, everything depends on clearing those huge regulatory hurdles and proving their tech works reliably and affordably at scale.
That's the essence of it. They are absolutely betting on the future, driven by this intense demand narrative.
Makes perfect sense. Okay, let's wrap this up then with a final thought. We've established the market is obsessed with nuclear right now because AI and data centers need all this power urgently.
Right. This creates a really interesting tension, doesn't it? Historically, the NRC licensing process, well, it's not known for speed.
Understatement of the year. Safety first? Absolutely, but slow.
Exactly. Prioritizing safety, which it must. But now you have this incredibly powerful commercial force, the AI industry, the tech giants needing massive, reliable power like yesterday.
Yeah. So there's this intense commercial urgency colliding head-on with a traditionally very cautious, deliberate regulatory process.
So here's the provocative question, maybe. How does that play out? Will this intense demand from the tech sector actually force the regulatory process to speed up for companies like Oklo and NNE? Could we see a streamlining effect?
Or will the NRC's long-standing safety mandate just ensure delays continue, regardless of the market pressure, regardless of the billions riding on it?
That's the tension. Innovation speed versus regulatory caution. That's what's going to define the next few years for these speculative nuclear stocks, I think.
So for you, the listener, it really comes down to thinking about which kind of exposure makes sense for your own understanding and goals. Is it the more established industrial supply chain side with Centrus?
Or is it the volatile, high-stakes, potentially revolutionary technology side with Oklo and Nanonuclear?
Two very different propositions.
Indeed. A potentially massive technological shift playing out, backed by billions in speculative capital. Fascinating to watch.
Absolutely. We'll leave you to mull over those implications. Thanks so much for joining us for this deep dive into the nuclear market today.
Yeah, thanks for tuning in.
We covered a lot of ground. We definitely recommend you try out our latest episodes covering other fast-moving sectors as well.